Hi, in this video, I want to talk to you about how landlords mismanage their cash flow and end up always struggling to have money to pay for repairs and vacancies. Have you ever had your property manager call and tell you that they needed $400 for a plumbing repair? Or worse yet, need $3,000 for a new air conditioning compressor? Or maybe you manage your own property and you discover this. In any event, you look into your checking account and you don't have the money for it. Hi, I'm Ron Sudman with Management One Property Management, and today I will be going over the 3 secrets for you to always have the money for repairs and vacancies. But I'm going to get back to that in just a second. Picture this for just a moment. You get a notice from your resident, which could come from your management company or from the resident themselves, that they are vacating after 6 years, and you know right now your rental property is going to need some hefty repairs, anywhere from $4,000 to $6,000 to make the property rent ready for the next residents. Now, you're either going to have to pull from savings or put it on a credit card at some crazy interest rate. And it's at this point you're thinking, why do I own this property? Maybe I should sell it, right? Well, not so fast. Let me explain. During the last 30 years of owning and running a property management company, I've seen this scenario play out thousands of times in the over 10,000 properties that we've rented, okay? Landlords literally are caught off guard on large repairs and improvements after a resident moves out of their home or rental property after several years, and even small repairs like a simple stove for $600, if you're not prepared for it, it can upset the apple cart. They are just simply not prepared for these types of repairs. Now, what typically happens when a person rents out their property, especially the very first time, they use their personal checking account for their rental properties. I mean, most think, hey, I only have one property. It's not like I'm Warren Buffett. I don't need all these separate accounts. But in actuality, you do. And here's why. As management companies raise the rent on your rental property, that additional money keeps going into your personal checking account. And guess what happens? It gets innocently squandered away a little at a time. It just gets eaten up for personal things like groceries, family vacations, and braces for the kids. It's then you begin to feel like you're always robbing your personal checking account to pay for the repairs on your rental property. And over time, that starts to wear on you. And you begin to wonder why you have this rental property in the first place. Now, how would I know this? Because I've lived this for over 30 years personally and with thousands of our clients. So here's secret number 1, to always having the monies you will need. Okay, you open up and set up a separate checking account and you name it a rental checking account. Now, if you have multiple properties, you can combine these all in one, okay? And I recommend that you deposit a minimum of $1,000 to $5,000 from your personal savings account to fund your new rental checking account. Now, you must start with it immediately. If you don't have the $1,000 to $5,000 and you can only put in $100, then start it anyway, because it's essential that you get started, okay? Now, put all the rental income as you receive it each month from the resident or the property management company into this account, the rental checking account, and then you pay your mortgages, taxes, insurance, repairs from this account. Now here's why it works. As rents increase just a little bit almost every year, that extra rent will start to build this new rental checking account. It's like compounding interest on interest. Let me give you an example, and I'm not going to get into the weeds today because that's a much lengthier conversation, but we can send you the breakout on what I'm going to go over right now. When the rent increases just $50 a month each year for 6 years and is deposited into your new rental checking account, you will have, believe it or not, $12,600 more in the rental account. And if the rent increases $100 a month, which sometimes on higher end properties it does, you will see over $25,200 in your new rental checking account. Okay, and that's after just 6 short years. So now you have the money because you're not using it for things in your daily life, and it's not getting squandered away in your personal checking account. By the way, I want to point this out. Independent studies have shown that 80% of residents do not move because you raise their rent moderately. Shocking. Okay? They move because landlords do not take care of needed repairs timely. In other words, most landlords do repairs when it's convenient for them. Okay? Residents are your customers. They're not just a tenant as most people refer to them as. Now here's secret number 2. Ask your CPA or whoever does your income taxes to show you how much you saved on federal and state taxes last year because you owned your rental property. And when you get your refund check deposited each year into that rental checking account, not into your personal account. Now, the average amount, just for example, a landlord would save on a single family home on their income taxes for owning that rental property is about $1,800 a year. So if you take that times 6 years, that's another $10,800 you'll have in your new rental checking account. Because here's the deal, if you did not have that rental property, you would have had to pay the federal and state government another $10,800 more in income taxes over the last 6 years. Here's secret number 3. Okay, do not, I repeat, do not rob your rental checking account, or as we call it, the piggy bank. Maintenance repairs, vacancies, and needed improvements over the years are coming. I can't tell you when, I can just tell you they're on their way. So look at this rental checking account as if it's your kid's college fund. So it's hands off. So you can see here by simply 1, managing your cash flow, number 2, raising your rents moderately, and number 3, okay, whatever you save on your income taxes on that rental property, you put it into your rental checking account. And if you do, in 6 short years, you'll have anywhere from $20,000 to $35,000 in that account. Now, in summary, I really do practice what I preach. I have several rental properties today that I own free and clear, and they are paying me today every single month, and what a great feeling it is. Not to mention, the properties are worth 5 to 7 times what I paid for them 15 and 30 years ago. Plus, I still write off my management fees, my repairs, my taxes, my insurance on my income taxes, which is offsetting the rental income I get each month. Now, by using this 3-step strategy, it allows you to enjoy the journey while you're building your portfolio of rental properties. In fact, you'll find yourself buying more rental properties because now it's exciting, and paying for the repairs becomes painless because you have the money. In fact, it becomes your very own monopoly game that not only you can benefit from, but you can teach your kids, as some of our current clients have taught their kids. And what a gift for them, right? To summarize, your next step is to open up your rental checking account today. See what you saved last year in income taxes from your CPA or tax advisor and deposit that into your rental checking account, and don't rob your very own piggy bank. Now you're on your way to enjoying owning rental properties and building a fabulous life and retirement. Thanks for watching.